Hello traders and welcome back to another day trading with a team. Why don't we go ahead and review this US dollar Mexican peso, possibly short-term short, right? Now let's focus on the US dollar. This is a US dollar base trade, so we're going to go ahead and look at the DXY. Look, the DXY is still trading inside of that horrible, horrible, horrible non-directional range, right? This is the 5-hour chart on the DXY, but let's go on the 4-hour chart on the DXY. We can even go to a 3-hour chart so we can actually look at only this range, right? We're seeing tons and tons of buyers jumping in at the bottom of the range around the 95.50 level, but the upside is clearly being capped by December 29th highs, right? We had this rejection 2 days ago, and then today this 3-hour candle is also rejecting those highs. Now, this is somewhat of a riskier um, trade on the US dollar, given the fact that we are in a non-directional range. This is why also I am only using a possible rejection of the 96.40 level as a day trade or a short-term trade. Now, if we go ahead again to the hourly chart on the DXY, we can see that in fact sellers are jumping in at this level. Now, my trade hasn't been triggered just yet. Let me show you what I'm looking at on the USD Mexican peso. Right, the USD Mexican peso is capped to the upside by this massive key pivotal level, um, which was the previous broken lows and historically also has been a key pivotal level in the sense that this is where we saw buyers jumping on late November last year, right? When buyers jump in here, price moved from low to high, let's call it from the rejection until November highs for about 7.19%. Then, of course, all those gains were erased. Now, the same level was broken with and retested late December, right, December 28th. And we saw sellers push price down towards those November lows, right, for a minus 2% move. So basically, what I'm looking here is a possible rejection. If we get that rejection on the DXY, it's very plausible that we are going to get another leg down on the USD Mexican peso. Remember that I chose the USD Mexican peso for some of my US dollar driven trades because when the US dollar moves, this market moves a ton. Now, the actual entry, right? The actual entry is this. What I'm looking at on the 50-minute chart, this is, of course, a short-term trade idea. I was looking at, first of all, let me show you the hourly because this is a no trade range that I want to show you, right? So basically, well, let me go to the 2-hour chart, right? So we can actually delete the noise out of the chart. So this is my no trade range on the USD Mexican peso, right? Um, above the 2075, the highest probability trades to the upside, and we should be looking for buys and buys only, right? Now I'll go ahead and looking back at the hourly, this level was massively rejected, and I didn't get in on my own ad market because first of all, I do not like to jump in on my trades without my validations being broken with, right? And if we go to the 50-minute chart, I'm going to explain to you my actual trade rationale. So basically, when I saw this 50-minute candle, I waited for the close of said candle. And that candle closed below this lows, right? Well, it didn't quite close below the actual level that I was looking at, which was um, January the 3rd and January the 4th lows right here. So that's why I decided to put my sell stops at the bottom or below the bottom of that 50-minute candle. And that was a great strategy because as you can see, price just jumped back towards those previous broken lows. Now, I'm still holding this trade. I'm still holding this. I'm not in this, not a trade yet. I'm still holding this order, and basically I have a 2.7 R on this, um, targeting this previous base right here. Now, the rationale behind this trade, it's pretty simple, right? As I stated before, I'm looking at a key pivot level in historic price action. I'm looking at some very overextended bullish move hitting that 161.8 of the first leg up, which means that we have hit those short-term bullish targets, right? And price breaking with that wedge, right? Now, my validation level, of course, is the break of that 50-minute candle, and I'm putting my stop losses just above that 50-minute candle. Right? If price breaks with that, with my stop loss level, I will be deleting that order. But if a price triggers me in, the probability of a run down or a dip or a bearish move here is high, right? Target-wise, the level that I'm looking at is this one right here, right? It's very, very plausible that we are going to see buyers jumping at this level. So what we need, or what I'm aiming at, is just a possible clean move towards that level, getting triggered on my targets, and basically get on a 2.7 R winning trade. The other thing that I do like about this is this short-term divergence that I'm seeing on my oscillator. And again, very overextended move at that 161.8. So let's see what happens. It all depends, of course, on the US dollar and what the US, I mean, on the um, short-term direction on the USD. I'll keep you posted, right? And basically, this is my first trade of the day, and I'm not looking at much because of yesterday's big moves. I'm just looking for pullbacks to jump in.